Welcome back. Thank you so much for staying tuned into Market Cafe. Let's get you some more news and updates then. And let's take a look at some macroeconomic data coming in then. India's inflation dial just takes a breather at this point. February CPI inflation has eased to a 7-month low of 3.61%, slipping comfortably below the RBI's 4% medium-term target for the first time since August 2024. So that's a sharp drop from 4.31% in January, with food inflation also leading the cool down to 3.75% from 5.97%. Now, this is thanks largely to tumbling vegetable prices, but it's not all soft data. Core inflation, that's the one that edged up to 4.05% from 3.76% previously, signaling underlying price pressures. When it comes to the non-food sectors, meanwhile, you also do have the India's industrial output that is flexing its muscles, climbing to 5% year-on-year in January, as well as a solid jump from 3.2% in December 2024. Now, with inflation cooling and growth picking up, does this really set the stage for a policy rethink when it comes to the RBI? We got the word coming in from Saugata Bhattacharya, who's a member of the Monetary Policy Committee, Indranil Pan, Chief Economist at Yes Bank, and Gaura Sen Gupta as well, Chief Economist at IDFC First Bank. Let's go across and listen in to what the experts then had to say.
The FY25 numbers are likely to be lower than the initial estimate, the NSO estimate, from whatever nowcast numbers, the high frequency indicators, etc. So given this, I'm not going to predict the next rate move, but certainly it seems that the inflation path that we are seeing and we are likely to see for the next few months, despite all the risks on the horizon. I mean, imported inflation, a warm summer, hot summer, etc. So all these issues coming in. I think the inflation path probably opens up more space for additional easing. And given the fact that we are still below 6.5% growth, I think that also opens up, which is probably close to the potential output that we have now. So I think the economy can absorb some more stimulus without the risk of overheating, with inflation again beginning to pick up. So I think, the growth inflation trajectory trade-off at this point in time looks favorable for further easing.
The comfort comes from food, no doubt about it. The comfort definitely does not come from non-food. And given the comfort from food, one may be slightly more confident of the consumption pattern going forward, given the fact that higher food inflation in India, given that there is a significant sort of bias in terms of the overall budgets of the Indian population, more skewed towards food, at least for a certain significant section of the population. There can be some benefits of lower food prices on discretionary consumption items. And therefore, we might actually see core inflation not falling in the medium term. It will be mostly sort of the food that will determine the course of inflation going forward.
We are seeing, if you look at other indicators, a clear pickup in rural demand, which is got supported by the fact that the Rabi as well as Kharif crop output this year is going to be stronger. The urban side, at least in our assessment, at least in the month Q3, Q4, there is a pickup, but it's not as strong as rural side. And in terms of industrial activity, IIP is showing some pickup, but other indicators did show some softness. For example, you had the PMI manufacturing, which came a bit softer. Electricity demand has moderated a bit. But again, it's been a little bit mixed on the industrial activity. But overall, if you take into account all growth indicators, there is a pickup in rural demand, as well as some improvement even on infrastructure. This is because government, both center as well as state government, their capital expenditure is actually picked up. But for the overall, in terms of growth implications, we still see FY25 GDP at around 6.3%.